Good day to everyone and welcome on board. My name is Frederic Bouthillier, Head of Shipping at Vertis Environmental Finance. I would like first, before we start this session, to thank very much Capital Link for their invitation. And my presentation today is going to be related to EU ETS and the inclusion of shipping in the carbon market. Without further ado, let's jump and start the presentation. Before to start the presentation, I would like obviously to briefly introduce Vertis and who we are. Vertis is a MiFID II regulator, active in the EU ETS market for 25 years or so. We are dealing with close to 3,000 counterparties. We have a direct access to the exchanges, ICE and EEX, providing the most competitive pricing on the market. We have also dedicated shipping desks to tackle the specific challenges that shipping companies and other stakeholders are facing in the light of the implementation of the new regulation. We are able to obviously establish tailor-made trading strategies and carbon hedging strategies. And obviously, we are able to provide spot and derivative transactions with forward and options. In terms of carbon market analysis, we have a full team dedicated to the carbon markets, to follow the carbon markets, and we are publishing daily, weekly carbon reports so that our counterparts are able to monitor closely the market. During my presentation, what I'd like to do is highlight a bit what are the major takeaways, the tendencies that we have seen since the inception of the EU ETS in January 2024. By now, pretty much all stakeholders have a fairly good view of what is the regulation and how it works. But through three questions, who, how, and when, I'd like to kind of highlight what are the major takeaways. First, who. Clearly, there are a variety of profiles taking on compliance obligation. And by now we know that it's either the owner or the dock entity holder. I would say the main common operational scheme emerging is that the dock entity holder will be responsible for opening the MOA, obviously establishing the MRV report, and performing the compliance before the September of each year. Clearly, for the procurement itself and the trading itself of EUAs, this is a responsibility that the owner is willing to keep under its own control. That's what we are witnessing in our day-to-day operation. Obviously, there are also non-compliant market participants that we have seen emerging, like charterers buying EUAs to pass them on to the owner for further down the road being able to comply. We have also seen other entities like bunker traders starting to buy EUAs to package them together with their bunker physical deliveries. And this is something that is developing quite fast, I would say. Obviously, something very important in terms of commercial agreements and documentation, it has to be, because we see that sometimes the owners and dock entity holder have not necessarily done what they should have done by now, i.e. working on their documentation and establishing who is responsible for what and who has to do what and who is paying for what. Clearly, that should be defined in the shipment code, which is document organizing the relation between the ship owner and the dock entity holder. And we can only but invite owners and dock entity holder to jump into that topic to make sure that everything is properly organized. On the second point, what we have seen so far taking place is that it's an appetite to trade below standard lot size, which are for ICE and EX, 1K or 1,000 EUAs. Clearly, this can be explained with couple of elements. The main element is probably the fact that owners are by now have a conservative approach, and they are covering their needs in EUAs on a sea passage basis, which obviously makes the monitoring of emission by type and volume of paramount importance. And I can only here highlight how it is important to make sure that owners have in place the proper monitoring system for their emissions. What we have seen also is that many owners were keen to cover for the time being their needs through spot trading. This is only the first year. The deadline for surrendering EUAs will take place only in September 2025. So owners have still time. But clearly, we have seen a taste for spot trading rather than hedging for, through options or forward contracts. Another element that is appearing like a takeaway, a major takeaway, is the request for pricing transparency. It's clear that owners and whoever actually has to buy EUAs to comply, whether it's the owner, the dock, quantity holder, or the charterers, for example, or bunker traders are, as mentioned earlier on, they are really keen on getting a real pricing transparency. And to answer that particular request, at Vertis, we have developed a system which is what we call trading at settlement. The settlement price is published by the exchange every day at 5:30, and it's based on the price published and the transaction that are made between just after 5 o'clock. And it's a price that is transparent for all users. And certainly this allows, for example, the owner, when he's talking to his charterers, to say, I've been purchasing my EUAs based on the settlement price, so I cannot be challenged on that level. So that's an element of comfort, and it's very important. Another element that I would like to highlight is the need to cover their EU ETS exposure despite the ongoing administrative bottlenecks. As we have seen with many administrative authorities, right now it takes a lot of time to open even the MOA account, the maritime account that will be used for surrendering, the maritime operator holding account that will be used to surrender the EUAs. In that respect, we have also set up what we call the long delivery product, which allows the counterparty to trade and to buy EUAs even without having yet a MOA open. Now, looking at when and answering the question when, what is important, I believe, and that's probably why actually the stakeholders and the owners are not necessarily looking at buying more than what they actually need, is that we've seen a lot of strategy based on the cost pass-through, i.e. I buy for that particular voyage and sea passage, and I'm passing instantly the cost to the charterers based on my calculations. So clearly, it's an important element, and it's one of the most important strategy and procurement strategy, beside obviously the other two elements that are based on volume and on price, trying obviously to always optimize your entry point, but clearly the cost pass-through, which basically is determining when you buy, because you buy at the time you pass the cost to the charterers, is certainly something to keep in mind, and that we see taking place in day-to-day operation when the stakeholders are trading EUAs and are looking at procuring their EUAs. For spot voyages, I think one of the main challenge we foresee and we see taking place is the ballast leg. Obviously, charters are very much prepared to take a responsibility, a financial responsibility in accepting an EU ETS price element in the freight from load port to discharging port when one of these two ports is, or the two ports are in EU. But certainly, from where the vessel is coming is irrelevant for them. So that certainly makes owners should make sure that they are properly organized and get prepared to buy EUAs covering the ballast leg, because that remains an important element. Also, talking about the EUA procurement, like I mentioned, for time charter, for example, in many cases, the EUAs will be provided by charterers. So charterers will buy EUAs and pass the EUAs onto the account of the owner. But again, I would like to flag a couple of elements here, the off-hire, and we have seen already a couple of cases taking place. And I would say something that is kind of emerging, but which is the counterparty risk. Because obviously what we want to avoid developing is charters having to pass on to owners EUAs under the charter party agreement, time charter party agreement, and then saying, oh yes, but there is this cargo claim, and we will pass on to you the EUAs only when that claim is sorted out. So clearly here, we want to avoid a situation whereby charterers could use their leverage, this particular leverage, and that's why I'm mentioning or referring to that as the counterparty risk. But clearly, this could be challenging at some stage in the relationship between owners and charterers when owners are accepting EUAs from charterers. And under time charter, what we have seen developing is also the price corridor trading strategy, which is clearly working well, and basically it helps. That trading strategy is kind of supporting the time charter scheme in mirroring the market, for the EUA price to always adjust in relation to the market movement. So again, three main questions: who, how, and when it comes to the main takeaways since inception. So we have just been able to see these three major points, and having covered them, what I like to go through now is the market. Again, EU ETS is a financial regulated market. The EUA is a financial regulated product, an instrument. And I was keen to share with you today the latest chart of the price development since 21. And as you can see, we will not dive into the details here, but as you can see, there is a lot of volatility. And that's one of the main characteristics of this market. But again, volatility means opportunity. And in our next slide, clearly, I would like to really cover briefly what has been the effect of the inclusion of shipping into the EU ETS market. Actually, inclusion of shipping didn't have a significant impact on price direction yet. That's the main takeaway. For the reason that to compensate for the maritime expansion, the EU allocated an additional 78.4 million EUAs throughout the 2024 auctions. And actually, that number is not enough to meet the additional demand, which should be around 90 millions. However, as you all know by now, there is this phasing period, and the first year, i.e. for 2024 emissions to be complied for by September 2025, the level of compliance is set as only 40%. So that 40% of around 90 million makes a total of 45 millions on the demand side, when actually this 78.4 represents the offer side, the additional offering side. So as you can see, we could actually say that the inclusion of shipping into the EU ETS has had a bearish impact at the very beginning, but it's obviously, shipping overall is a drop in the ocean when you're comparing numbers, as you should all keep in mind that, for example, the volume traded on the spot market on a daily basis is anywhere between 2 and 4 millions, and the volume traded on the forward and future markets is anywhere between 20 to 25 millions. So clearly, the shipping itself is not going to have a significant impact on the EUA price as we speak. Actually, looking at the market, we can see that since summer 2023, the market was rather bearish due to bearish fundamentals, with actually a 13% drop in price since the beginning of January. This is basically due to industrial slowdown. The REPower EU is an important element, the energy complex, and also the actual reduction of emission in 2023. I'm sure you've been following the numbers that were published by EU, and the emissions were basically reduced by 15.5%. So clearly, less emission equals to less demand in terms of purchasing EUAs. It has to be mentioned that the hedge funds are playing a crucial role in that market, and they are certainly a shifting element, and they are bringing certainly an additional volatility in that market. They have remained so far, and I will highlight that in the next slide, but so far they have remained net short since August 2023, which is obviously suggesting a consistent bearish view. Nevertheless, natural gas price and geopolitics elements drove that market up with a 10.9% rally since April. Something we should also mention in terms of geopolitics, actually, is that the rerouting of ships due to the Red Sea attacks apparently are not going to have a significant impact on the demand side, at least for the time being. Nevertheless, this particular situation is obviously more exposed to unexpected events, and potential short squeeze situation, should I say, must be closely monitored. And clearly, as I mentioned, and I will jump into the next slide, as you can see, and as it is highlighted here, the commitment of trader, what we call the commitment of trader, is published every Wednesday, and it shows what is the net position for what we also call the big hands, the investment fund, private equity funds, etc., the banks. And it shows that right now, the net position is the net short position. So like I mentioned, likely pushing the market towards a bearish mode. And it's that book that is building up with shorts is clearly an exposure to any short squeeze if structurally suddenly the market would go up again. So clearly this situation should be monitored very closely. And when I say should be monitored very closely, again, it's like I mentioned earlier on, it's a financial market, financial regulated market, and clearly as an actor in that market, each and every of them should be fully aware and should make informed decisions. Therefore, it's very important to have a good understanding of how the market is working, what is driving that market, what are the drivers behind that market. And clearly here, we are trying through our various publications at Vertis to make sure that all the stakeholders that are new in that field are fully aware and prepared, duly prepared for this new market. I would like to thank you for your time, but before we leave it there, I would like maybe to highlight a few elements to summarize what we just discussed and highlighting the way forward, so to speak. Building on the insight shared earlier during that presentation, I would say 3 pivotal recommendations emerged to optimize carbon compliance. The first one, and foremost, I would say, it's closely monitoring emission types and their volume enables instant and precise coverage on a sea passage basis. That's of paramount importance. Moreover, a comprehensive understanding of the EU market dynamics and its primary drivers is crucial for informed decision-making process. Last but not least, fine-tuning procurement strategy based on individual profile and segments with a focus on cost pass-through determines the optimal timing for EUA purchase and I would say overall by implementing these 3 strategies, stakeholders have the best chances to navigate the complexity of carbon compliance with confidence and efficacy. With that, obviously, I thank you very much for your attention. Please do not hesitate to reach out should you have further questions, queries. We are there to support you in tackling the challenges generated by this new implementation of regulation. I would like to thank you very much for your attention. Again, thank you for Capital Link for their invitation. And on that note, I wish you a nice day. Thank you very much.